Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you've been with us for a while, you know what we do here. But if not, then if you're new, well, what we do is we talk about companies that are declaring earnings and not just about the earnings numbers. No, we talk about how to profit on these stocks that are declaring earnings. We do this each and every week. In fact, here we are the week of September 29th, 2025. And although this is another pretty quiet trading week, we still have a few brand names that stand out. The featured stock this week is probably Nike. That's the biggest name. Nike will have results later in the week. We'll talk about that here in just a few moments. But other than that, it's really all about food. So stick around and you'll find out why. Here we go. All right, let's take a look at our list here. And if you are new, on the left-hand side of this sheet, we have what we call our breakout stocks. These are stocks that are we have an average move. Not that we have that opinion, but these historically move pretty big. And what we consider big is double digits, 10% or more around their earnings announcement. And that is a historic average combined with what the market makers, specifically the option market makers, are pricing into the options around these earnings events. On the right-hand side, we have stocks that are quiet. These stocks will have single-digit moves, or they anticipate having single-digit moves. And again, that's not only the historical average, but combined with what the market makers are looking at as we head into earnings of each and every week. So let's jump in, and we're going to start on the right-hand side of the ledger, and we're going to talk about quiet stocks. So what do I mean by a quiet stock? Well, let me give you an example. This is Pfizer. Now, Pfizer doesn't have earnings until November. All right. So we're still a month and a half out from Pfizer having earnings. But you can see here, look at the scaling on the right-hand side of the chart there. And you can see that this is in $2.50 increments. So this stock is what we call a quiet stock. This stock just doesn't move very much. And I've got the earnings events circled with the ellipses, and you can see that through the earnings events, this stock barely budges. So this is what we call a quiet stock. So how do we trade these around earnings? We sell option premium on these stocks that are anticipated to move only single digits. Implied volatility on the options gets expensive. We sell that expensive option premium going into the earnings, and then we profit when that implied volatility, when that option premium drops, when that collapses, called a volatility crush. All right, so here we have our list for this week, and you can see that Nike is on there. There's a few familiar names. So let's jump to my charts, and we're going to start with Carnival Cruise Lines. All right, so Carnival had earnings this morning. All right, they declared this morning, Monday, 7/29. So 9/29. We're not in July. We are in September, 9/29. And they declared before market open this morning. And, well, you can see that there was a little bit of volatility in the stock, but their anticipated move was to be around 7%, okay, plus or minus. And look at this, they're down 4%. Now, intraday volatility, they opened up probably about 4 or 5% higher, then they dropped about 4 or 5% lower, and that would be about an 8% intraday move. But from yesterday's close, and that's what we look at, we have only moved 4.6% right now on Carnival, and the stock just hasn't moved very much at all. All right. Now, we have, if we look at that, when we looked at that list, you saw that we only had a handful of stocks. All right. We only have 27 stocks in total that declare this week. And for our list, we are only watching 13 of them, and I've even narrowed it down from there. So let's talk next about Jefferies. All right, they will declare this afternoon after market close. That's Monday, September 29th. And the average move here is about 8%. Now, you'll notice here that this stock is in a pretty big uptrend. In fact, it's gone from, let's go back here to $50 back in June, up to $70 here in September. So a nice little rally. Okay, so this stock has really been on a run. It is a financial stock, and they have been on the run. Now, we're not really concerned about the past historical movement of the stock or how volatile it is. We are concerned just with the earnings announcement. So this is one that we're getting up there to that middle ground. That closer we get to 10%, where it takes us over to maybe a more volatile stock, this gets us a little bit careful around these. Okay. But still, given that this is a $66 stock right now, you could probably sell option premium around here. I mean, you can, but would it be worth it? Can you get far enough out of the money and sell that option premium so the stock doesn't jump, a big number, and you have a loss? But that's why we watch a lot of these. Jefferies is one that I would definitely watch this cycle to see how it moves. You can see the last earnings cycle. Look at that. Didn't really move at all around the earnings announcement. So given that financials have been a little bit more volatile here, this might be a good one to watch. Okay. Another good one to watch is Vail Resorts. Okay. Yes. The company that owns all the ski resorts. All right. They are, look at that. They're $150 stock right now. They're well off their highs, but still, stock is consolidating here. Vail has an earnings announcement today after market close, and the average move here on Vail is about 6%. Now, these stocks that are priced anywhere above $100, I would say anywhere from $75 to $300 in that window are really ideal for selling option premium going into the earnings event, especially if they are historic quiet movers. Okay, so Vail, the symbol here is MTN for Mountain. All right, they will have earnings again today after market close. The average move here is about 6%. All right, so it'll be interesting to see how the earnings call goes, because if you haven't priced out what a day ticket is to go skiing, I mean, it is crazy expensive, and really the value is in a season pass. So for those that ski more than I would say twice a year, it is definitely worth getting a season pass. But man, their daily numbers are just crazy right now, and we'll see how that could cause maybe a little bit more volatility if they're not hitting their numbers around their sales and their revenues. All right. Okay, continuing on our quiet list, we have Paychex. Now, man, look at this. Paychex has been in a pretty severe downtrend, dropping $30 since June. But again, we're not concerned with the overall trend. We're just concerned with the earnings announcement. Paychex will declare tomorrow on Tuesday, September 30th in the morning before market open. The estimated move here is is about 5%. So Paychex could be one that definitely could have some nice option premium on those options, and a lot of strikes that you could then create that Iron Condor. And if you're not familiar with what an Iron Condor is, there are plenty of free resources out there that can teach you what an Iron Condor is. Effectively, it's two vertical spreads, a bear call spread and a bull put spread combined together. All right. Just to put it a different way. And yes, you can trade all four legs at the same time. That's a four-legged trade, and you can do them all at the same time. Now, we do issue these trade alerts through a publication of ours called Delta Neutral Income, and we do this each and every week. We usually have an earnings candidate that we put on our quiet list that we do put through that publication. All right. Now, over to the big name here, and this is Nike. All right. Nike, again, is getting up there around that 10% number. They will declare tomorrow after market close. So that's Tuesday, September 30th. The average move here is around 8%. Now, with given what tariffs are, overseas production issues, consumer demand, all those things could cause Nike to be a little bit more volatile than it usually is. Okay. So it might be one to watch. Now, their last earnings announcement let's see here. The stock had a 15% move. Okay, that was a 15% move back here. So the stock moved greater than normal. Here was a relatively quiet as it goes um, for Nike. This was less than a 10% move back here in March. Okay, but this last one could be an indication that we could see a little bit more volatility from Nike. So definitely one to watch, and I would be very careful in trading this. And believe it or not, I was able to place to trade out of. Well, I didn't actually put the trade on it, but I modeled it a trade on Nike, and I did. It was an even balance between doing a straddle, which we'll talk about those in a moment, or one of these Iron Condors. They were about even, meaning the stock's estimated move was right at that break even, about 8% out of the money. So the option market makers are pricing that in right now. They're pricing for that 8% move, and it would be really hard to get an edge on a particular strategy around Nike. All right. So a couple of more is I mentioned that this is the week of food. All right. So let's begin with ConAgra brands. All right. Now this is a pretty inexpensive stock. It's an $18 stock. These are a little harder to do these Iron Condors on, but they are doable, especially when a stock's estimated move is supposed to be around 9%. Okay, now ConAgra will have earnings announcement on Wednesday, October 1st, before market open. So first thing in the morning on Wednesday. The average move here is about 6%. Okay, so just do your math and go. If you can get something 10% out of the money and collect some decent premium on that, that that gives you an edge. Okay, 10% above, 10% below, or maybe even 8% above, 8% below, something beyond that 6% number, because that's the average move in the stock. All right. Now, speaking of food, we have Cal-Maine Foods. All right. Now, this is a stock that could really support a decent Iron Condor, trading up here near $100. They are going to declare Wednesday, October 1st, before market open as well. And the average move here is about 8%. Okay. So, you could see an $8 move here pretty easily. So just be aware of that. If you're looking at an Iron Condor as a strategy, you need to go well beyond that to give yourself a high probability trade, a high probability of success, that is, in that trade. And if you can't, then you just skip it. Okay. I don't know if you can get a good straddle or strangle, which we'll talk about those here in a moment. But anyway, Cal-Maine Foods, along with ConAgra, they're both on our quiet list, and they will have earnings on Wednesday of this week. All right. So before we jump over to our breakout stocks, these are going to be the ones that are really exciting. All right. I do want to mention that if you like what you're hearing here and you find this of value, please like and subscribe, because we talk about these strategies each and every week right here. The key with these company earnings, believe it or not, is not so much in right now in the hit or miss of their earnings estimate, but rather what the CEO says about their outlook. Right now, outlooks are driving these stocks, whether they have positive results or negative results. We have seen many stocks that just missed their earnings like crazy, but then moved higher because of the outlook by their CEO. All right, so just keep that in mind right now. And if you want to ever listen to one of these earnings calls and listen to the CEO or CFO talk about their outlook for the upcoming quarter or the upcoming year, getting on their earnings call is pretty easy. You can do it through many free resources. I believe even Yahoo Finance, many others, maybe your broker, always has a link on there to listen to the call, and you can get some good insight from there. All right, on these company earnings. Okay, so let's move over to the other side of the ledger here and talk about our breakout stocks. Now, these are the ones that people love to watch and love to see how these stocks move. Let me give you an example of one real quick. All right, this is Akamai. Akamai does not have earnings this week. They won't have earnings until November. But I do want to use this as an example. You can see where the ellipses are and look at pretty much where that ellipse is in relation to the previous close. And that you can see that this stock is a wild one. This stock moves double digits each and every earnings event. And for these types of stocks, we actually buy premium going into that earnings event. Yes, it's going to be more expensive because implied volatility is going to rush into these options. But if we can get a decent price for a straddle or a strangle, okay, a straddle is buying a call and a put at the same strike price with the same expiration date. And a strangle is buying a call at one strike price, buying a put at a different strike price, but the same expiration date. That is a strangle. And that's what we do on these big breakout stocks. So let's take a look at our list real quick. And again, we have more food stocks there with Lamb Weston and United Natural Foods. But this is a pretty quiet list. So let's go through it. These are big movers, big potential movers. And we're going to start with Progress Software. All right. Now, they are going to declare today, Monday, September 29th, after market close. And you can see here that the average move is about 13%. Now, notice here on the last earnings announcement, that's a big drop right there on Progress. And, these are, again, double-digit stocks with a lot of movement. That move was a 13% move right here. Okay. This drop from right here, this close down to this close. Again, 13% move. The stock moved right where its average was, right where market makers were pricing the estimated move. So there probably wasn't an edge in the trade, but that's what we're looking for. That gives you some idea. If we go back, I don't know if I have, the other earnings event was actually on this candle right here. Let me identify that for you. All right. This was the earnings event right here. So it did have a big drop, and look at the follow through on that. That's what we like to see, is some nice follow through for some big movers. All right. So we are going to look for a big mover today after market close. So here I would definitely want to get a straddle or strangle priced in under 10% of the current stock price, so under $4. And that might not be easy to do. The option market makers are pretty good at pricing in these estimated moves and bringing prices in line with what that is. And that's the challenge here. All right. So let's move on to another one of our featured food producers here. We have Lamb Weston. These guys are into potatoes, if you're not familiar with the company. So Lamb Weston Holdings here, they're going to declare tomorrow, September 30th. That will be Tuesday before market open. And the average move here is about 16%. And that is what is expected from Lamb Weston. This is another good one here where we're expecting a double-digit move. And really, I was pricing out a straddle and strangle a little earlier, and it was being priced in around 13 or 14%. And that's a little too close for comfort, but it's definitely something to keep an eye on today with the price. And you can see here the stock gapped up higher and then had some upward follow through, which was very nice before the reversal. So this stock is a mover of about 16%. All right, so you're going to be looking at $7 or so of movement in the stock really quickly after the earnings event, but specifically after the earnings call. A lot of these stocks have an initial reaction to the earnings numbers, whether they hit or miss, but then it's the earnings call that can really add fuel to the fire. So you want to definitely pay attention to what those earnings calls have in store. Okay, and our final food company here is United Natural Foods here. Stock has had nice little rally going into earnings here. They will declare tomorrow, Tuesday, September 30th, before market open. The average move here, look at this, it's 20%. All right, and look at this, and another big drop in the stock, and earnings came right in the middle of that on that last earnings call right here. Okay, a lot of volatility coming in play. Now, this time, it's had a little volatility to the upside, but not what we have seen before. So we'll definitely want to keep our eye on this. The estimated move here, look at this. The average move for this is around 20% for this company. And this is a $31 stock. So this stock is really easy to place a trade on. And if you can get the straddle or strangle priced in around 10% of the stock price, there is your edge. Okay. If they're expecting, if they're pricing in a 10% move, but the stock usually moves around 20, that's what we're looking for. All right. That is what we are looking for. And let's close out our week with another stock. Now, I don't usually do $10 stocks here. All right. But when you have one that moves 20% around earnings, it's definitely one to keep your eye on. This is AngioDynamics, stock symbol ANGO. They are going to declare on Thursday, October 2nd, before market open. And once again, we have another stock that's anticipated to move about 20%. Okay, so that would be a $2 move on this stock. So this stock could be at $12.89. This stock could be at $8.89 by Friday morning. Okay, so you definitely want to keep your eye on this. I do like this consolidation pattern that we have here going into the earnings announcement. But this stock, this kind of candle, I don't like. I like this kind of candle for Iron Condors, but not for breakout stocks. Okay. And if we go back, you can see here, stock does pop and it can move up. That's decent percentage for a stock that was trading at $9.65 to go up to $10.94. That's a nice day for that type of stock. So I'd be very careful with this. This is one to probably watch. But if you can get a trade for about $1, which might not be easy to do, that's what I would pay attention to. All right, for AngioDynamics. And really that closes out our list. All right. Let's take a look at the sheet once again. And I want to point out to you that really Thursday, not much is going on. Normally we get a lot of action on Thursdays. All right. But this is one of the quietest weeks of the current earnings cycle that we're in. But note, it doesn't matter that we're not in what's called earnings season right now. Each and every week we have companies declaring earnings. And if you thought that you might have missed Nike earnings, well, Nike's doesn't declare until tomorrow. Okay. So this is when you can find these name brand stocks that just are kind of isolated by themselves. And we see these each and every week right here. But as of Friday, look at that. Nothing happening on Friday. So we can kind of take the day off, so to speak. But really, Thursday and Friday this week are going to be very quiet. They front loaded the week this week. Everything is on Tuesday and, well, Monday, today, tomorrow, and Wednesday. And that's a little unusual. Okay. But we do have a new trade for you this week. All right. So hang on for just a second because I want to show you what we did last week. And again, we had a quiet week last week too, but let me show you what we did. We did Worthington Industries. The symbol there is WOR. And we had a stock that was trading right around $62, $63. We found some decent pricing on a stock. Now, what you're looking at here is stock price, stock chart on the left. On the right-hand side, this is a option risk graph. Focus on the black line. Ignore the green, the blue, the red for a moment. Okay, the black line is at expiration, and you can see each time the black line changes direction, that's a strike price. So when it makes a point like it is, this tells me that this is a straddle. So we did do a straddle at the $60 price level, okay, on Worthington, okay, and it cost us about $580, okay, in total, $580 for that straddle. So how did this trade do? Well, they had earnings a couple days later, and look at that. That stock gapped down and just traded lower throughout the day. Now, we exited right here. If you look at the stock chart, you'll see a wick right here. This is when we sent out our trade alert to exit this trade, okay, because we did this for our subscribers as well. And that was a 60 8.9% profit in just 2 days on a trade. We profited $353 per straddle. Okay. So a smaller account, say a $10,000 account, okay, which definitely could have done this trade. A profit of $353 is a 3.5% return on portfolio in just 2 days. All right. So we are having pretty good run here on this show with our trades. This is our third, at least our third winner in a row, if not our fourth. Normally we get on good runs here on the show, and I am geared up for our next opportunity here. And if you're ready for that, let's take a look at it. All right. So we are going to do a strangle on Unified Foods. Okay. UNFI. Okay. United Natural Foods. Sorry. United Natural Foods, not Unified Foods. United Natural Foods, UNFI. And this is going to be a strangle. Okay. Notice how the risk graph, the black lines change directions. Okay. Each point is a strike price. So we have 2 points there. Okay. You have a call above and a put below. This is a strangle. This is going to set you back around $300, a little over $300. So it is a very affordable trade. Now, if you have a $100,000 account, you're probably going to do 10 of these. Okay. And maybe a few more, maybe, 10 of those would only be $3,000. That would be, you'd probably do 20 of these. Okay. To give you an idea of, you don't want to risk more than 5% of portfolio on any single trade. So I try to go to the lowest common denominator and show you those results. So I'm using a hypothetical $10,000 account, and we have this trade here. It's about $315, and that would be about 3% risk on portfolio. Very, very doable. And if you have a bigger account, you just multiply it times the number of contracts. Don't exceed more than 5% of your portfolio. And this stock will have its earnings announcement again on Tuesday before market open. All right, so tomorrow morning. So we would put this trade on right now and look for the stock to have earnings results tomorrow. And interestingly enough, these are October expiration. Okay, so we have actually several weeks that we could be in this trade, but we might be out of it as early as tomorrow afternoon, depending on how the stock moves. All right. So once again, if you like what we do here, please like and subscribe. Everyone have a great trading week, and we will see you right here next Monday morning for another edition of Earnings Call. Everyone have a great week. I'll talk to you again.